Hello and welcome to the Apex Partners Family Finance Workshop. This workshop today is designed solely at helping new parents and young families improve the way they manage their finances. My name is Ryan Love. I'll be presenting the webinar today. I'm a founding partner of Apex Partners. Apex Partners as a business specialises in working with young families and new parents and improving the way they manage their financial affairs. A bit about me: I commenced working in the finance industry in 1996. I've held various roles at investment banks and advisory firms before getting into Apex Partners and setting that up. One thing that our business and myself in particular is passionate about is helping young families manage their finances. So we work with clients before they have families, so work through the transition of working with two incomes, and then doing some planning work for them around starting a family, working with one income, and really allowing for the expenses that come along with commencing a family. Hold a Diploma of Financial Services Financial Planning, as well as a Bachelor of Business from the University of Technology here in Sydney. The information that we'll be presenting today is of general nature only. If you have any questions specific to your own circumstances, by all means you're welcome to contact me via email or telephone to discuss, but please just be aware that the stuff we're talking through today is of general nature only. Things that we'd like to cover: we'll go through the agenda just quickly to start. Talk about the 4 rules of money. These are rules or philosophies that as a business we apply when we're giving advice to clients. Then we'll talk through 7 tips to stick to your budget. Then we'll look at making the most of government benefit payments, and in particular we're talking about family assistance office payments. We'll look at the cost of raising your children. We'll look at strategies to protect your wealth. And we'll go through a topic of strategies of how to keep your super working whilst you're not. So really good strategies there for those of you that are working part-time or those of you that might be on maternity leave. And then we'll wrap up and have a quick discussion about what we do as a business and the advice process. So first rule of money is to spend less than what you earn. Now that sounds simple, but it's certainly the first thing that I say to new clients, and the first meeting that we have is, do they have a household budget? Now more often than not, most clients don't have a budget, or certainly they don't have a budget that they've updated or kept current recently. So in that context, it's very difficult to know whether you are or you are not spending less than what you earn. So it's the first rule of money, is to make sure that you're spending less than what you earn, and obviously to do that you need to have some form of budget. Rule number 2 is to protect your ability to make money. Without a doubt, the biggest asset that most clients have is their ability to keep working. So I've got an example there that if you're 35 and you're earning $75,000 a year, over the remainder of your working life, assuming you work to the retirement age of age 60, you'll earn over $2 million. Now I challenge most clients that I talk to say, what other asset do you have that's worth $2 million? So it's important to think about protecting your ability to make money. So things that you can do is obviously upskill, continue to be trained and educated so that you can continue working, but also have some sort of backup planning in the event that you can't work due to injury or illness. Third rule of money is to have access to emergency funds. So I use that term a lot with my clients, emergency funds. Emergency funds is simply a pot of money that you can access at short notice for any unexpected item of expenditure. It could be things like, your car engine blows up, you need that to be replaced. It could be things like you've been made redundant and you need access to money for living costs. As a general rule, I think a good level of emergency funds is 3 months worth of your regular household expenditure. And the fourth and final rule of money is think about asset structure. Anytime I meet a new client, well, the first thing that goes through my mind is to think about who owns their assets, what names things are held in, and who pays the most amount of tax. So ask yourself, do you pay more tax than your partner? If so, then think about who should hold your investments. By way of example, if you've got an income producing asset, so money in a bank account produces income, then really you should be thinking about that asset should be held in the person who pays the least amount of tax. It just makes a simple sense to think along those lines in terms of asset structure. On the flip side of that is, if you've got an asset that generates good tax benefits for you, then obviously you want that to be held in the person with the most potential to use those benefits, being the person with the highest income level. So that's the 4 rules of money. Now we're just going to move on to 7 tips to stick to your budget. Obviously, before we can talk about tips to stick to your budget, if you don't have a budget, we have a very good budget calculator on our website. I've got a link to it up there where you can download the budget calculator. Feedback from our clients that have been using the calculator has been really positive, which I'm happy about. The budget calculator opens up in Microsoft Excel. You can toggle between different expenses that's applicable to you, so you punch in how much money you earn and then you can toggle whether that's weekly, fortnightly, monthly, and likewise with your expenditure, so you can dictate what frequency your expenditure item comes through. There are some user instructions there, but if you do have any problems using the calculator or you need some assistance with Microsoft Excel, feel free to contact the office during business hours on 1300 856 338, or you can send me an email at ryan.love@apexpartners.com.au and we'll endeavour to help you through the process of using the calculator. In terms of budgeting itself, we've got some tips that I think are very important to help stick and maintain your budget. The first tip is be realistic with your numbers. So it's very easy to put numbers on a page and not actually stick to them, or not actually think that they're realistic, or you might have missed items. So a good sanity check is if you've done your budget and it says you can save $1,000 a month but you've been saving nothing, well then chances are you might have missed a couple of your expenses. So you've got to be realistic with what you do as a starting point. Second tip, which is something that's, I guess, works for me, and I encourage my clients to do the same, is to use cash rather than cards. Now I know that there are, it's appealing to use a credit card because you get some rewards points and it sounds all well and good and you get 45 days interest free, but one of the problems in terms of using a card rather than cash is that you lose accountability. When you take out money from the ATM and that's what you've got to spend, obviously you know how you're tracking relative to your budget. When you start using a card and you get your statement once a month, you might have forgotten some certain items and it might be more difficult for you to stick to your budget. The third tip that I've got is to pay yourself weekly. Now a lot of the time clients will come to me and say, oh look Ryan, I get paid monthly, it's really hard to stick to my budget. Well, in actual fact you can still pay yourself weekly, you've just got to change your mindset. Your mindset is, yeah, you get paid your income from your employer each month, that goes into your pot of money, that's your financial structure, but there's nothing to stop you setting yourself up so that you pay yourself a set amount each week and you can live off that. So I've got an example there saying, why don't you just withdraw, say, $100 at the start of each week, and that's your spending money. If that's what your budget tells you can spend, there's nothing stopping you just withdrawing that out at the start of each week and living off that level of money. The fourth tip that I've got is to have a separate bank account for lumpy expenditure. So things like your car rego, utility bills, those types of things, Christmas presents, all things that come through once a year. So I'll often check in with some clients, say, how are you going sticking to your budget? And I say, look Ryan, I'm doing really well at sticking to my budget, except last month we had the car rego fell due so we couldn't meet it. Well, in actual fact, if you're saying those types of things, you're not really sticking to your budget. So if you can set up a separate bank account where you put in a set amount each week or month or whatever cycle you want to pay yourself on, then you forget about that lumpy expenditure, you know it's taken care of, and you're always adhering to your budget. Tip 5 is ensure that your Family Assistance Office payments are made quarterly or in some cases fortnightly. Now you do have the choice with Family Assistance Office payments of receiving them as a lump sum at the end of the year, or you can have them on a quarterly or fortnightly cycle in some circumstances. So it's always good to have them come in on a regular basis it just helps smooth the cash flow through. So point 6 or tip 6 is a little bit cute, I guess, and it's being honest with your partner. Budgeting for a family is a team exercise, and you've all got to be honest with each other in terms of what you need to spend to make sure that you've got a comfortable standard of living. So it's important to be honest with your partner and make sure that you're on the same page in terms of your financial goals and your expenditure needs. And the final tip is to review your budget regularly. One of the reasons why I really like our budget calculator that you can download off our website is that it opens in Microsoft Excel. Now you can save this on your computer, you've always got access to it, you can update it any time, you can print it out. It's got a lot of things that enable you to regularly update it and review it. As distinct from some other, I know that on some websites you can create your budget and it's stored on a website. The problem with that is you've always got to go back to that site to access it. So it's important to review your budget regularly, make sure it's up to date, make sure it's current. I know that expenses change on a regular basis, so you always got to make sure that you're on top of it. And I think the best way to do that is to have some sort of common file that you're working on with a family. So that's the budgeting tips covered. Now we want to talk about making the most of government benefits, and specifically there's a lot of other government benefits that we could talk about, but we're going to talk about benefits for young families and new parents through Family Assistance Office payments.